Germany sells a 0% 30-year bond for the first time. Dateline August 20, 2019. This is nuts, man. This is nuts. So let's read this because this is the first time we've ever been down this road. We have a experience with Japan, but not, which is a big economy, but Germany is one of the big three. The big three are USA, China, and Germany. So we are number one by far. China is commie, and then Germany is, what is it? More of a fascistic, socialist, democratic one for sure. And fascistic doesn't mean Hitler running through the streets. It just means it's run. The government controls everything. It allows private corporations to dictate things. So you got big government at the top, allowing private property, allowing private corporations to make money, recognizing that the unions, the government, and the private companies are all in bed together. And what they do is they limit competition. There's no other way around that. That's why there's not that much entrepreneurship and enterprise in these European socialistic kind of fascistic state, because you got the big guys, the big three, big government, big labor, and big business. The little guy is kept out because of huge regulations, which is why the U.S. is awesome. Anyone can start a business. I know it's not easy, trust me. I know they want to, who was it? The Institute for Justice had to sue for allow a black lady entrepreneur in Arizona, Phoenix, to do cosmetology with African hair braiding without having to go and get license approved. And thankfully, this is why I vote for the Republicans, man, because at the end of the day, the Republican Party recognized, Governor Ducey said, this is nuts that we're not allowing this lady to do this without all of this 40 hours of cosmetology and all that. It's just all barriers to entry. Republican Party has its flaws, but my goodness, man. What's Janet Napolitano? She was the governor of Arizona. It's under her and people like that these regulations come to forefront. We got to make sure everybody's safe. It's an African hair braider, for heaven's sake. Who's she going to hurt? Well, she could hurt somebody. Do you think she won't hurt somebody just because she had to go for 40 hours, or was it years and years, not 40 hours. It's like 40 weeks of licensing? Come on, man. Jeez, nuts. Anyway, so the Institute for Justice had to get involved, and they won. And then in this case, Governor Ducey is a Republican. He said, yeah, screw this. It's nuts. And you have this kind of stuff all over the place, even in America. And we're supposedly the unabated capitalist mecca. Is simply far, far from reality. So anyway, never mind. You got a guy, Eric Gardner, selling cigarettes on the street. That's okay. He didn't do it. He was put there because of insane regulations by the city of New York. If I'm a consenting adult and I want to buy a cigarette from Eric Gardner, why does freaking the governor, or in this case, the mayor, care? It's nuts. All right, so Germany will auction a 30-year bond with a 0% interest rate for the first time on Wednesday. The bond sale that took place will mean that German government will not make any interest payments to those buying the bond until it matures in 2050. Bondholders would usually receive both the face value back as well as interest payments over the asset's lifetime. But a zero coupon bondholder would only receive the face value back. So what happens in a typical zero coupon bond is you buy a bond for 70 and it matures at 100, something like that. And so, I buy for 70, I get 100. You know exactly what your interest rate is going to be. No muss, no fuss. It's easy. In this case, they're selling zero coupon bonds at 100 that mature at 100. So there is literally no coupon. I mean, it's crazy. It's crazy. And you're not getting your money back for 30 years. The sale of 2 billion euros of the long bond was announced last week, comes at a time when yields of these fixed income assets have hit record lows, with many moving into negative territory as investors look to shelter from market turbulence and capitalize on central bank easing. So this is what's weird to me. Capitalize on central bank easing, which would lead you to believe it's inflationary. And so if I'm going inflationary, I'm certainly not locking up a 30 years in a zero coupon bond with no coupon. It doesn't make any sense. So if the central bank eases, then why would I want to be in long bonds? It makes no sense. Central bank easing usually means inflationary. This is what I'm saying. We're in a complete new paradigm. The paradigm shift. We haven't. This is completely new, and it's insane. And no economist would ever have predicted this. None. So tell those economists who make their predictions, man, it's no different than a monkey shooting darts at a board. In a challenging market environment, investors tend to move all their investments from riskier assets into safe havens like gold and government bonds, thereby bumping up demand and prices, and lowering yields. So remember, anytime you get higher demand, you have higher price. I don't care if it's for this coffee cup. I don't care if it's for my Boston College t-shirt. More demand means higher prices. And when it comes to a bond, it works like a seesaw. Higher prices, lower yields. Lower prices, higher yields. It's literally that simple. Nothing could be more mathematical or scientific than that when it comes to bonds. A bond's coupon rate is the rate of interest it pays annually. So a zero coupon means it literally pays zero for the coupon, has no coupon. While its yield is a measure of the return based on coupon and purchase price. So we know for a fact that yield is going to be, I'm getting no coupon and I'm buying 100, I'm getting 100 back at maturity. I'm getting no yield at all because I have no coupon, and I'm getting whatever I put into it, I'm getting that back after 30 years. Is Germany in recession mode? It's on the brink of recession after new economic data show the economy shrank by 0.1% in the second quarter of 2019. Not in the good old US of A, baby. Take that, Germany. Take that. Yeah, take that, Merkel. Yeah. USA, in your face, Canada. I love Canada. It's just fun because that's blame Canada. Remember that? All right. The slowdown, along with uncertainty around trade wars and Brexit, is ramping up the pressure on the government to deliver a fiscal stimulus package. Germany previously sold a 10-year zero coupon bond in April 2015. However, a move that is often noted as being the spark for a Bund tantrum after a lack of interest in the sale led to a sale-off. So basically a buyer strike, which we'll talk about here in just a second. Essentially, people said, I don't want that. I'm not going to buy it. And so the price went down, and they said, let's not do that again. But now it's different. In 2015, the ECB, the European Central Bank, had ruled out cutting rates any further, a promise they would renege on. What? The government reneging on promises? But they reneged on it later in 2015 and then in early 2016. In contrast, the ECB has reopened the door to rate cuts without giving any indication of the new floor for the ECB deposit rate. Further highlighted that the sale of the German 30-year bond on Wednesday and the 10-year bond on August 28th the risk is that these yield levels will eventually encounter a buyer strike where people say, I got to get some bang for my buck. I can't lock up 30 years of money and receive nothing for it. I just can't. And in fact, if you're going to be easing the central banks, I can't lock up 30 years of money and get nothing on it because easing supposedly leads to inflation. Inflation dooms fixed assets. The average yield in the auction was less than 1%. It was negative 0.11. It's crazy. So the question that comes out here is, in fact, it was interesting because we just got note that Lowe's and Target had booming earnings for the U.S. So we're not in a recession if we have earnings growth. It's just not happening. Germany has, obviously that's just two stocks, two companies. I get that, but hard to see with the Lowe's, with his home improvement. It's consumer spending dominates stuff, man. It's just all there is to it. And the consumers are flush with cash relative to what they were in 2008. So I'm just not worried about a recession. Germany could potentially be in one for sure. They're one quarter in, and if they do one more quarter, they're recessionary. No other way around that. I just find it interesting for sure that Germany, it just, again, is one of the biggest economies out there. What do we do with your investments? And I actually am somewhat positive about this because the biggest risk that you have as a soon-to-be retiree is the 1966 and 1982 debacle, and that was inflationary. We're not having that. Japan, we need to look at Japan as a model for going forward. Not we should follow them, but that will show you, freaking part and parcel what it looks like in an economy that has high debt but no inflation. It's interesting, man. It's interesting. Bonds are not the answer. Stocks, I don't know what to make of stocks because stocks do better because the yields on bonds are so low that people actually buy more stocks. Probably. But who knows? It's crazy. We shall see. So remains to be seen. I'm optimistic. You should be too. This is not bad. This is certainly a whole lot better than it was in 1966 and 1982. All right, we'll see you next time.